what would you advise a retail investor who's really invested in the markets, wanting to see how can I make money do? What would you advise that retail investor at this current juncture?
See, if I was a retail investor, in fact, I am an investor, right? So, sitting on some cash can be a strategy also. I'm not talking about intraday kind of trading or short-term trading, but between now and January the 20th, hopefully we'll get some clarity about how things are going to move. So even if I miss 1 to 2% of, maybe more of the market moving up, as long as I can see there's a greater trend going forward on the upside, then I can go back in again. But the risks with the valuations where they are, if anything is untoward, then obviously our markets will see the kind of falls that we've seen recently. So I think that, as I said, there's no catalyst for fundamentally to be buying aggressively our market. But I just see a little bit more downside in terms of possible, around the kind of tariffs that could be introduced. And don't forget, let's just say, there's a narrative going around that tariffs may not be, the 60% on China might not be enough in terms of it'll be lower than that. If that was the case, then that would be good for China, right? And therefore, you could see a stimulus package from China as well. So flows would definitely go towards China. So we might get some flows as a passive part of those inflows into emerging markets, but it's not going to be, the kind of flows that we've seen in the past when valuations were more reasonable.
Right. In fact, taking cues from what Andrew is saying, Manish, what would you do? Because Andrew says that, yes, it's not a good strategy. It is a good strategy probably to sit on some bit of cash as well. How are you looking at it? Because I don't think so that the FI selling is going to be abated anytime soon. Yes, probably the quantum will reduce, but they getting into the buying spree is still far away. How are you looking at it from a retail perspective?
Yeah, so, I agree to the fact that, you couldn't for sure believe that, this is the end of the FI selling, and just because you had a pullback on Friday and today, because it was so surprising that even on Friday, the FI selling was there in the cash market. So, it's a matter of principle whether you want to hold cash or not hold cash. As a matter of principle, I don't believe in sitting on cash, because if clients have given you money, it's basically for you to get invested. But I think there will be sectoral churn. I think the top sectors where one could find comfort, and because there is a propensity for INR to depreciate, there would be bigger margin of safety in buying into export denominated sector. And because in the US, there would be a propensity to have corporate tax cuts and invest in technology. Technology is one area where I could find very high comfort to invest even in current market levels. Same goes for a pharmaceutical, even that space is quite conducive. I think the banks as a whole, a large weightage in the index, has seen decent earnings growth. Valuations are extremely conducive. And, there we have a decent margin of safety. So in spite of, the markets not looking too great at the Nifty level, I think sectorally, these would be some of the sectors where one could find comfort. The high beta sectors, which is relying a whole lot on government spends and private capex, look very vulnerable even now. Even though there is a belief that H2 would be much better in terms of government spends, because government does understand where the problems are and they will lift up the spending, which has been anemic in the first half. All of that is within the realm of possibilities yet to be seen. But today the markets seem to be believing that that's all come, and which may not be true. So valuation comfort is not there in the investment related theme, so to speak, and definitely not there in the private capex side of things. Private capex is just not happening. The private capex is totally absent. So these would be vulnerable sectors and areas clearly to be avoided.